Hello and welcome. This is the 2nd of December 2010, and this is my next daily review of the euro dollar, an update on what we did a few days ago. As you can see, this is our daily chart of the euro dollar. We had a long uptrend followed by a clear reversal, and it's gone back down again. We have a recent very strong downward trend. We're going to draw that one in now. Take the line and draw that in, just to show how it is. And obviously we've dropped quite significantly. We had a little retracement, it bounced back off the trend line and came back down again. And if you notice, the distance between here and here and here and here is roughly similar. There's some symmetry in this, and you can see in the previous video I predicted there would be some kind of reaction around this point. Let's take a look at where we are, where it did actually react. It got down as far as 129560. We're around a round number in this area, a very strong round number, 130000, 13000, sorry, which is obviously a number with 3 zeros, and that's psychologically it's a very key area. Let's draw in some Fibonacci's like we did before. This is the recent low up to the recent high, and a retracement, smack on the 78.6% Fibonacci retracement. If we zoom out a little, let's do another Fibonacci from this area, from this much lower low back here to the recent high. And we also have a 50% retracement as well, which is normally very strong on the euro dollar as well. So although things didn't line up exactly, so we had a 0.5, 50%, we had a 78.6, we had a round number. As I said in the last video, this area looked like there was going to be strong evidence of a reversal, but you know the main trend was down. That's what we expect to happen. Even this upward move is only probably a retracement. I would expect perhaps for it to change again in the future and continue on down. If we zoom back in, we can have a look at possible Fibonacci retracements for this. Click on here from the recent high to the recent low, bouncing off at 78.6. And you can see here there's a target area. There's the original 0.618 that we had, but we've also got a 0.236 retracement of this move and a 0.382. And when you've got such a big drop and going down, normally when it does a retracement, it's quite a quick, sharp retracement. So these areas around here are likely targets. But I've gone long. Here we had a bullish outside bar, and as you can see, the following day it started continuing to go up. So I went long here, and my stop at the moment was underneath the recent low, but I've now moved it up slightly to around 30 pips below where I currently am, so as to minimize my losses, which is obviously very important. The other thing to look at is areas of support and resistance. We notice here that this key area where it bounced off at 78.6% is actually a pivot point as well. If you have a look at it, you can see that look here, we bounced around this area here before, we've bounced around it here. If I keep going, I'm going to draw this line in to show where that is. If I keep going back, I'll just click off that so I can move back. Historically in the past, chances are it's also bounced on that area. Okay, so that was a key area. Other key areas, if we zoom out, here's another one. It's bounced a lot around here. These are key areas to watch for in the future, and that's that's close to that 0.618236. So we can bounce back up. Let's zoom back in again to be clearer. We've got a possible conjunction here of a support resistance area of a 2.36. Sorry, a 0.236, 0.618 from the other side. You've got the trend line, you've got the support resistance area. So somewhere around here we could see it reacting back and coming back down again. And we're looking for, that's what we're looking for. We're looking for conjunctions of areas where multiple indicators are saying the same thing. It doesn't have to be exactly in the same space, but if it's in the same area, plus or minus say 10, 20, even 30 pips, if a lot of things saying the same thing roughly around the same time, it's a good sign that something's going to happen. So if you're in a trade leading up to that point, tighten up your stops. If you haven't got into a trade, wait for that reversal, watch it reverse, take the trade, and put your stop loss above where that, or below where that reversal point was. Okay, let's have a look at the weekly chart. Once again, we see where that area has bounced off there. We can do, there's not much more on this particular weekly chart. We definitely have a future area to watch out for here. Look at all these places where it's bounced off support and resistance, which matches that recent high, so that shows another reason why that high happened in reversal. And in fact, if we do a Fibonacci, it'd be interesting to do a Fibonacci retrace. Not much really, not much evidence there. But look at the candlestick here. Look, it's clearly looking like it's going to reverse in the future. I mean, you've got a huge shadow and a small body. We haven't finished a week yet, so we can't confirm it until the week is finished, but that's coming up in a couple of days, so it'll be interesting to see what the shape of that is. And that looks like a major reversal signal on the candlestick there. So, just to summarize, I have gone long because we had this clear area and it did bounce up, so it reinforced. We have a bullish outside bar candlestick, and we're continuing to go long. We bounced off a support and resistance area plus the 78.6, etc. Fibonacci retracement. So there's all good evidence points. My target area is around either the 0.236 or the 0.382 along with this trend line and the support and resistance line. So we will move our stop up as the market continues to go up, because we need to protect our profits and our losses. Okay, reduce our losses and protect our profits. So as this continues to move up, I will move a stop into break even. I will move a stop to guarantee some profit. And we will look to see what happens in the next few days. Great, okay, thank you very much for watching the video, and look out for some more videos coming soon. Thank you, goodbye. Oh, and please take a look at my website, www.firststepsinforex.com, where you can download a manual and free videos about all of this that I'm showing you here. Thank you, bye-bye.